cycle. Now, there is a lot of speculation in crypto. I get that, because there is in most new technologies. We get that in technology stocks themselves. So right now, we are at the bottom of the monetary cycle. Going forwards, we know the Federal Reserve is going to start increasing rates at lower increments. I don't think they go much further than maybe this 50 now. Maybe they try and eke in another 25 and try and keep rates stable, and then wait for CPI to fall below Fed funds rates, which I think happens March, April. So I think next year is a game of dramatically changing liquidity conditions. Now, I also have charts to show that too. I've got chart of global M2, and you can see it versus ISM. ISM leads it, inverted on this chart, and it says when ISM starts falling, global M2 follows and turns around. And that means because ISM is saying growth is falling, and therefore monetary liquidity needs to come back in to save and manage an overly indebted system. So that's the typical state of affairs. We're exactly at that kind of turning point. So that's where we are in the monetary cycle. I think we will see inflation fall much faster than people expect, and therefore stimulus will come. And I think the Fed are going to think or look somewhat stupid by about June, where I think inflation is going to be down closer to 2%. I mean, the year-on-year rate of change of oil prices alone is probably zero right now. And if oil goes to $60, where I think it goes, and we get into March of next year, that was the time from the Russian oil crisis premium of about $120. So oil will be down 50% year on year. That's incredibly negative for an inflationary environment. Owners equivalent rents are rolling over, and eventually wage growth will start slowing down dramatically. So my bet is we probably get negative rates back in the end of 2023. Not negative rates, negative inflation, 2023, 2024. I think the roadmap that we use for this is the 1940s and 50s, and not the 1970s that everybody thinks. So the 1970s was the only example in history where inflation came up, came back down, didn't go all the way back down, then shot up again. I think that was driven by demographics, and the Federal Reserve are fighting an old ghost, and it's not the ghost that they should be fighting. I think the more decent parallel is the 1940s to the 1950s, when everyone came out of World War II, the factories had to retool, so there was supply shocks, and then demand shock of everybody coming into the workforce again. That drove up prices 20%. It was a bigger event than COVID. And then prices collapsed, went negative 2, negative 3% year on year, then rebounded 2 years later. We got a secondary bout of inflation just from the mathematical numbers. The Fed that time around imposed yield curve control because they didn't want to raise rates and destroy the economy. I think we're going to see similar this time. Anyway, too early to tell, doesn't really matter for this point. This point is we're at the low point in the cycle. I think inflation is lower. I think the crypto markets are going to be explosively better this time around. We're also seeing a lot of interesting things like the RSIs, weekly RSIs in Ethereum and Bitcoin are right down at levels that have always seen reversals. We're seeing it with on-chain activity. We're seeing it with minor capitulation. We're also seeing it with volatility. The 30-day realized volatility of both ETH and Bitcoin is at levels that always precedes the large rallies and the big reversals. So I've pretty much got everything in place. Is it possible to get some other down leg? I doubt it, unless something can drive bond yields high, and I just don't see that outside of a temporary blip because one of the inflation numbers or one of the employment numbers is skewed somewhat. So I don't see that happening, so I think we are moving higher. I think ETH based in June, and I've said that for several months now, in fact since June when I started adding to my positions. The bottom of the cycle is always the it's a scam, it's a Ponzi, all the media hates it, everybody throws shit at each other online, everybody's looking for blame, looking for scapegoats. We are exactly in that point now. It is ugly out there, and that ugliness out there is a real measure of where we are in the cycle. So we're at the despair and anger phase, and then we have the acceptance phase, which is the boredom phase, which I think we've rolled into, where prices don't do anything for a while and everyone starts getting fed up and moves on elsewhere. You can see artificial intelligence is getting people's attention. just when they should be looking at crypto as well. Don't forget, artificial intelligence is not really investable for most of us because it's all VC, while crypto is real-time VC that we can trade, which is part of the magic of it.